Hello, everybody. Welcome to this webinar that is brought to you by Bursa Malaysia and managed by LifeChamp. So today's our topic is a winning formula to win from stocks on Bursa Malaysia. Okay, so today we are very excited because we have invited a speaker who will review to you his strategy on how he can win consistently on the Bursa Malaysia market. So how are you guys doing? See that all of you here are doing fine. Should be doing fine. Okay, so let's proceed. Okay, so a disclaimer to this webinar is as usual, whatever we share on this webinar, whatever case study we do is only for educational purpose. So we will never give you any recommendation to buy or sell any companies that we mentioned in this webinar. So if you decide to make any investment decision, so you'll do it at your own risk. Okay, so allow me to briefly introduce our speaker today. He's a very young investor, and he is none other than Jin Hao. So Jin Hao is a position trader in the capital market focused on stocks and futures. So he is a founder and master trainer of Street Finance. So his signature program, which is Street Trader Intensive Program, allows individuals to trade without monitoring and speculating in the markets. So he is often featured in media like City Plus FM, Borneo Post, Sinchu, etc. And he also speaks for Bursa Malaysia and other investment banks. He's also a frequent invited speaker in university and colleges. All right, so that is about Jin Hao background. And Jin Hao, how are you today?
Good. Everything is good.
Happy to have you back here on Bursa webinar to review to us your strategy to invest and trade in the market profitably.
Yeah, it has been quite, I think, couple of months we didn't see each other. I mean, as in any kind of like webinars occasions.
Yes.
It has been a few months.
Yeah, definitely.
Yeah.
Can't wait to hear your sharing.
Okay, so what should I do now? Should I share my screen already?
Yes, correct. You can share the screen.
Let me share my screen. Okay. So what do you guys see right now? Can you see my screen?
Seeing your slide.
My slide, huh? Okay, great. So, all right. What is up, everyone? Welcome to this webinar. Okay, so first of all, thank you, Bursa and Shane, for having me here today to share with you guys some of the things and experience. Okay, mainly this is actually just my personal experience trading in the Bursa market for close to a decade. And I'm here to share with you sort of like I try to condense down a lot of information, okay, that could be very useful for you guys to make your investment and trading decisions. But before that, apart from the usual disclaimer, one thing that I want to just to mention before I continue is that whatever I mentioned, the things that I'm going to share with you later, those information and things are purely based on my personal experience and opinions. Okay, so my experience, understand that there are a lot of ways to profit from the market. Okay, so I am speaking from my experience as a trend follower, which is the strategies that are limited to the strategies that I use. Okay, so take it as a second opinion, okay, or as a reference instead of a factual thing or a buy or sell call, things of that nature. Okay, so with that getting out of the way, let's jump into the content for today. So what we have today is the first one is the key traits or the key differences and things about Bursa stock market, the Bursa equity market. The second is we're going to understand the theme and the trend in the market. Now, how many of you know that market has certain theme? If you know, then you type theme, T-H-E-M-E, meaning that sometimes certain theme will do well. The market will have a theme and the certain stocks or the certain sectors will do well. This is what I'm going to discuss with you, okay, later in more in depth, okay? So if you do not know about this at all, okay, tonight you're going to take home a lot of information, useful information. Okay. Now, the third one is the primary strategy that I use to deliver multi-baggers. We're talking about those like things more than like 50% gain or even 100% gain. Okay. So I'm going to share with you the main strategy that I use, and also I'll share with you a little bit information of the current Bursa stock market, because we know that right now the market is very, very challenging. Okay, right now the market is very challenging. Like it or not, be it you are an investor, you are a midterm trader, you are a long-term trader, you are a speculator, things are quite uncertain right now. Okay, how many of you agree? If you agree, you type 1 in the chat box. You type number 1 in the chat box, meaning that you agree that the market is very uncertain right now. It's very choppy for a lot of people. Sometimes make money, sometimes don't make money, and end up like back to square one. Then you are lucky. Okay, things like that. If you lose money, then it's like quite many people lose money this year. Okay, so to some people this year, if you can tahan there, okay, you don't make big losses, you break even. To a lot of people, this is quite good already. So I see a lot of people typing 1. Okay, great. Okay, so now the first thing, key traits of Bursa stock market. What are the key differences? Because just to let you guys know that I trade stocks, okay, around the world, not limited to Bursa, but of course, Bursa is where I get started and I'm still trading in it, okay? So now, this is the 10-year price trend of our FBM KLCI. So why is this important? It's because if we look at the past 10 years price trend of FBM KLCI, can anyone tell me, does FBM KLCI really has a long-term trend? Yes or no? If yes, what's the trend? Okay. Is it up or is it down over the past 10 years? Okay. Yeah. 1% type back to square one. You are correct. Basically, after 10 years, our index, our FBM KLCI back to square one. Okay. We have the ups, we have the downs, but after 10 years, we back to square one. So what does that mean? It basically means if you hold long term on most of our blue chip for the past 10 years, you probably don't make a lot of money. You probably don't make money, but you also probably don't make huge losses if you held on those blue, so-called quote-unquote blue chip, the top 10, 20, 30 companies, however you define them. Okay, so this is basically what it is. However, why do I say this is a key trait for Malaysia market? Because if we compare to this around the world, we can definitely see some disparity there. Okay, so first thing we see the line in cyan color, okay, which is labeled IXIC, is basically Nasdaq. So we can see that Nasdaq since like 2010, starting like 2010 for the past decade, it has been very performing, and we have the first spike as well. Okay, let me just do the pointer. So we have the first spike for Nasdaq before year 2000. A lot of people might recognize this as the dot-com bubble. And after that, basically, we can see that the Nasdaq is leading the world. Okay, meaning that if you buy the top companies in Nasdaq for the past decade, you are a happy investor. Okay, second to that is the SPX, which is the S&P 500, which is the one of the major indices in the US market. So basically in the US, that's why people say holding the blue chip, things like that, buy ETFs or whatever thing that follow the index. Yes, because their index got trend. Okay, our index, if you hold it for since like 1990, basically you can see that our FBM KLCI go up by only 200%, meaning that you triple your money compared to if you put your money into Nasdaq or S&P. So definitely over the long run, okay, definitely over the long run, Bursa market, okay, you cannot treat it like a market whereby you hold blue chip for long term, you expect to make money. It is not the kind of market per se, but it doesn't mean that you cannot make money from a Bursa market. Just that the money probably is not in the blue chip, because we all know that, okay, the FBM KLCI consists the top 30 so-called blue chip companies, okay? It's being labeled by blue chip. So these are the companies in Malaysia by market cap, which means, okay, these companies are the top in terms of market capitalization in Malaysia, okay? And most of them the top, if you go to TradingView, you search for Malaysian companies and you sort by market cap. Basically, most of those companies are actually index component. Okay, index components. So stocks like Maybank, Public Bank, okay, these are the famous names that we all know. Okay, and most of them are in the banking sector. Okay, and I will share with you why this is a problem. Okay, whereas if you see over the US, okay, these are the companies that are leading the market. Like for example, Apple, Microsoft, Google, Amazon, Facebook, Tesla, Berkshire Hathaway, and things like that. Now, why am I pointing this out? The next slide, you will understand. Now, this is what we call a business life cycle. So we know that a company might have things like a business typically will have an introduction stage. And then after that, after the products, the businesses are being introduced to the market, the next stage is what we call the growth stage, whereby the big money can be earned. Okay, the big money can be earned. The third one is what I call maturity stage. This is when companies are more sort of like maturity, the business is already matured. They are more willing to give out dividend, but you don't have much more growth. Okay, spaces for space for growth, and whereby the last stage is what I call the decline stage. Okay, the declining stage, whereby things are dropping, your revenue are dropping, and your cost is still there, or even increased. Cost is increased nowadays. Things like for a lot of industries and businesses, things like that. And some companies, they will try to do some corrective actions, and they will introduce new products to extend their life cycle. Now, let me just ask you one thing. With Malaysia market being led, okay, in terms of market cap, okay, being led by those giant companies like banks, or even like our Maxis companies like that, DG, most of the companies that you see here in the Malaysia, okay, top companies, which stage are they in? Okay, 1, 2, 3, or 4. Okay, 1 being introduction, 2 being growth, 3 being maturity, and 4 being decline. Which one do you think they are at? Okay, so quite a lot of people say 3, maturity stage, 3 to 4. Actually, yes, I quite agree, because like it or not, okay, banking sector is kind of like a sunset industry if you look at one decade forward. It would be a sunset industry if they don't do some sort of like new things, okay, to adapt with the fintech and things like that, okay. And when Malaysia, you know, when it comes to adapting new things, we are very slow, okay. So a lot of these companies, they are in maturity stage to declining stage. Okay, I think most of you would agree with this. However, those in the US, let's talk about Apple, Microsoft, Google, Amazon, Facebook, Tesla, okay, things like that. Which stage they are in? 1, 2, 3, or 4? On average, which stage do you think they are at? Okay, a lot of people, some type 2 to 3. 3, okay, 2 to 3. Yeah, I would say on average, they are somewhere between 2 to 3. Okay, they are somewhere between 2 to 3, because these companies, they still have massive growth. They still have massive growth. Okay, it's like Apple, they try to do fancy things. They try to come up with things like they want to do their own electric car, things like that. Okay, and you can see that these companies are those companies that whereby they can still make a lot of profit moving on, especially technology companies. Okay, especially technology companies that you see in this list. Okay, why? Because nowadays, everything, literally almost everything in our life is technology. Okay, you are currently watching this webinar, okay, without Maybank, without Public Bank, but probably with an Apple laptop or Apple computer. If not, then you are using any laptop that runs on Windows, which is by Microsoft. Am I right to say that? Or you are on YouTube watching this webinar as a stream, and then YouTube is actually under Google. So everything in our life is already related to tech. Okay. How many of you agree? If you agree, you type agree. We cannot disengage our life with tech nowadays already. Okay, so tech is definitely one of the things that moving on, there it will still pop. Okay, so based on my personal experience, this is what I'm going to share with you. In Malaysia, most of the leading companies by market cap, okay, are either in maturity stage or declining stage. Okay, if they don't start doing anything, the numbers will start dropping. If they don't start doing anything, the numbers will start dropping. Next, this could explain the reason why the blue chip in Malaysia are not as stable, quote unquote stable, as what people may have hoped as compared to other markets. It is like you hold a lot of blue chips for the past 10 years. Okay. Yes, you will make money, definitely, no doubt, but it may not be the wisest choice. Okay. And by holding blue chip blindly in Malaysia, there's no guarantee to profit even in the long run. Okay. Probability for banking stocks in Malaysia to double in the next 5 years versus probability of Apple's stock or Microsoft stock to double in the next 3 to 5 years. I think the answer is quite obvious. Okay. So next, the gold nugget is often in the mid to small cap companies that are still in a growth stage. Okay, because growing companies can give more earnings surprise. Now, one of the key factors that can push the share price up is always earnings surprise. Okay, this would sort of like drastically inflate the price in short to mid-term. Okay, but of course, long-term companies will reflect the real enterprise value, but in short to mid-term, okay, earnings surprise is what we all need, okay, in order for the price to go higher. So many of these companies are often directly or indirectly related to the mega cap growing companies like US. I think a lot of people, if I give you an example, I think many of you can relate. If you can relate, you type R. Okay. It's like Apple is still a mega cap, is still a growing company. So we don't have Apple in Malaysia, but we have related company, semiconductor companies in Malaysia. And when this team comes, okay, people buy stocks like Inari and make big bucks a couple of years ago. If you can relate this, type R. Okay, if you can relate this, type R. And actually last year, whereby when we talk about green energy, Tesla stocks is like going up like crazy. And we see stocks like Greatech, which is related to that they're involved in like green energy or whatever manufacturing of solar panels. These companies, they benefit quite massively. Okay, they get quite a lot of benefits. Okay, I mean as in companies in Malaysia. Okay, so yeah, you can argue, you can say that it's a supply chain, things like that. But sometimes when the overall team is that, okay, sometimes stocks that are not related can also go up. Okay, so this is what I realized. Okay, for the past 10 years in Malaysia, stocks that make me money mainly are small to mid cap. Okay, small to mid cap. So a couple of years ago, stocks that I profit the most are Pentamaster and Franken. These few years are Greatech, UWC, and recent years DNO. Okay, if we exclude Glove last year. Okay, these are the things that give me a lot of profits. Okay, so these are not big caps company, not blue chip in Malaysia. Most of them are not. Okay, so and just like stock market around the world, certain sectors or subsectors will be in play in our market, or the market has a team of stocks. This is what I'll explain later. And one thing that I want to share with you is this. Not all sectors are created equally when it comes to profitability. How many of you understand this statement? Okay, not all sectors are created equally when it comes to profitability. If you understand, type 3. If you understand, type 3 in the chat box. Okay, I see 1 3. Yep. If you don't understand this statement, let me just give you a very layman example. Okay, we have heard people say that, okay, they make 100%, 200% from technology companies. But you seldom hear anyone say, I make 100% capital gain from a banking stock. That happens maybe in 1990s or before the subprime mortgage crisis. After 2008, 2009, you wouldn't hear that. Okay, but okay lah, exclude Warren lah. If we include Warren, then of course the technology stocks Warren can also like 1,000%. Okay, so exclude leverage. Okay, exclude average. Okay, so here's the thing: not all sectors are created equally, and this is a fact. You can go and back test. How many of you really do hear anyone say that I make 200, 300% from plantation stock? It's quite rare. It's quite rare, honestly speaking. Okay, so here are the sectors in Malaysia defined by Busam Malaysia. So we have construction, we have consumer products and services, we have energy, which is oil and gas and things like that, financial services, which are the banks and things like that, healthcare, everybody is familiar with that, industrial product and services, you have your packaging stocks, you have your metal stocks, you have your plantation, you have property, you have REITs, technology, telecommunication, media, transportation, logistics, and utilities. Now, I want to focus on a few that most people will touch on. The first one is construction and properties. These two sectors, you can make money, but they are somewhat seasonal and cyclical. There are certain years whereby these two sectors will be in play and you can really make money from them. Okay. They are quite cyclical nowadays. Okay. And consumer product and services, they are also quite cyclical. And plantation is usually either the stock is boring, okay, less volume, or for some reason, maybe FCPO go up, people speculate. Okay, so many people can stuck in plantation stocks. Okay, and industrial product services, they are quite, this is a mixed bag. Okay, and we have REITs, which is boring one. Telecommunication, media, quite small, this one. Okay, now, if we talk about energy sector, do you agree that nowadays energy sector becomes one of the highly speculated sectors in Malaysia? Yes or no? Did you realize that it becomes one of the most speculated, okay, sectors in Malaysia? Okay, so if you really go and study this, you will realize that, okay, not all trends are created equally. Okay, not all trends are created equally. And you will also realize that for technology, at least in this decade, you can see more uptrends in technology stocks. Okay, and so goes to healthcare, is more like a cyclical things. They have a cycle. Okay, they have a cycle. So, and here are the things that next thing I'm going to share with you is the theme and the trend in the market. Let's discuss a little bit about history. Okay, now, first thing that we got to understand is stocks move in group. Okay, stocks move in group. And of course, there are stocks that don't move in group. They are like solo men. Okay, like stocks like MGRC, they got no team, they got no sectors, they got no group, but they move up because it is in an uptrend. But most of the time, okay, stocks move in group are usually stocks that is more apparent and is easier to be recognized, and people will talk about it. Okay, and you have a more lasting trend. Now, this is 2021 year to that. If this year you make a little bit of money, your portfolio is positive, and you are holding technology stock because of, you're making money because you're holding stocks in the technology sector, okay, type T in a chat box. T stands for tech. It means that year to date, you are holding the right stocks. Okay, but of course, within the technology stocks, there are good stocks and bad stocks. There are trending one, there are non-trending one. Okay, I have asked a lot because I have like my own batch of students and things like that. I've actually asked, and based on what I see, those people who are still positive this year, okay, most of them, they catch on trend on technology stocks. Now, alongside maybe some of them, they are in P Metal, they are in Anju previously, they're also in stocks like MGRC and things like that. Okay, but mainly it's technology. Stocks like, we are talking about stocks like DNO, things like that. Okay, and also beginning of the year, okay, we can see tech is basically the only winner because this is a continuation of last year. Okay, this is a continuation of last year. And after that, we have the COVID crash. But after June, July, technology starts moving again. And what is the worst performing sector in Malaysia this year? Can everyone type in the chat box? What is the worst performing sector in Malaysia this year? Some people type #health. This is, okay, your healthcare stocks, the glove mainly led by the glove. Okay, so you can see that from here, health is not doing well. So basically, technology is doing the best. Okay, next would be industrial product because we have the metal stock being speculated and being played. And next to that is a transportation because transportation is up mainly because of, I think it's like MMC Corp. Okay, MMC Corp. So this is a little like non-accurate one. Okay. Then after that, you see finance, property, the CI, utilities, construction, plantation, health. They are all in a negative region. Okay, they are all in a negative region. Now, in year 2020, we can see that the healthcare sector was going up because of glove, and it peaks at somewhere around July to August. Then after that, it stays quite flat to a little bit of downtrend. Second to that is actually technology. So last year, if you trade glove and you are able to exit by Q3, okay, you did not hold too much past Q4 or this year, you probably make some money. And also, if you have been holding technology stocks that are moving last year, you will be a happy trader. Okay, these two are the outliers of last year's market. Okay, so in 2019, okay, what we can see is a little bit of mix back here. Okay, we have technology, okay, selected tech stocks are going up, and the construction beginning of the year, things are going up. Okay, you have stocks like Gadang, Gamuda, things like that. They are going up a little bit. Then after that, there's the trend soften again. So this one, you can see that construction, basically it goes up beginning during the first half to like Q3. Then after that, it starts going down. And if you have been holding technology stocks, your average gain should be around 30% as well. Okay, based on the index at least. Okay. And for 2018 is basically not a good year. And construction stocks are performing during beginning of the year, partially because in 2018, construction sector has been the worst performing one. Okay. And also in year 2018, probably it has been a year that many people don't make money. Okay, many people don't make money. And you can see that most of them are quite flat. Okay, most of them are quite flat. And I think one of the most trending stocks that I make money from in 2018 is actually QL. Okay, it's actually QL. Now in 2017, no questions, technology is still the best. And after that, we have like industrial product because do you remember in 2016 and 2017, we have the steel and aluminium sectors being in an uptrend. So technology and industrial product, they are the two best. Okay. And also technology was being harmed. Okay. Not to say being harmed, but they have a little bit of correction beginning of 2016. Sorry, 2016 here. And then after that, it goes up a little bit. Okay. So year 2016 is also a little bit of mixed, sort of like mixed result here, but we can see that construction is the best, but it's actually still okay, still okay. Okay. And 2015, what we can see is technology and industrial product. And after that is consumer. So if you still remember, in 2016, 2017, basically it is a years that whereby a lot of technology stocks and also a lot of consumer stocks like Nestle, okay, like Pardini. If you still remember, this is a period of time whereby these stocks are actually shining. Okay. Now, after that, you have 2014, whereby it's led by technology, then construction, properties is down, and you have properties and technology leading in 2013, and you have finance leading in 2012 because finance has been dropping in 2010 to 11. Okay, I think it's a 2010 or something like that. Okay, so post the few years after the subprime mortgage crisis, we see the finance sector going up a little bit. Then after that, basically, it's nothing again. Okay, now this is what we call sectors, but of course, there are some subsectors inside as well. Now, this one is just a rough idea. Okay, so let me just ask you, what are the main sectors that you have seen for the past 10 years that have the most trending years? Can anyone type in the chat box below? Okay, anyone? Okay, most of you say tech, but actually industrial product is also one of them. Okay, industrial product is also one of them. Okay, so now the next thing that I'm going to share with you is an example of team. So you can see that somewhere around this region, okay, 2014 to 2016, 17, but actually the first wave whereby Malaysian ringgit, okay, US dollar to Malaysian ringgit is somewhere around like below 3, go all the way up, inflated to somewhere around 4.5. Okay, this period of time, 2014 to 2000, maybe mid of 2014 to end of 2015 or even 2016. Can anyone tell me during this period of time, what was the theme in Malaysia? Can anyone recall? People are talking about one type of stocks. It is caused by 1MDB, but because of 1MDB, our ringgit becomes weaker. And when our ringgit becomes weaker, what was the theme in Malaysia market? Furniture, half correct. Okay. Yes, export. Okay, export is the one. Okay, so there are a few export sectors in Malaysia that people usually focus. The first one is technology. So you can see Inari from 2015, okay, actually it's 2014 to 2015, somewhere around here. This region, Inari was up by like 70%. Okay, and Lihen, which is a furniture stock, go up by 300%, one trend. Okay, and then we have like Syntex, okay, industrial product, okay, go up by 100% as well. Okay, so these are the example of team, and then we have other teams that like many people are talking about the recovery team in Malaysia. Many people are talking about like 5G team couple of years ago, things like that. Now, how do I personally differentiate what are the stocks that would go up, or what are the stocks that I personally sort of like, how do I filter the stocks? Because like what one of our friends here say, technology is big. Yeah, I know. There are a lot in technology. Okay, there are a lot of subsectors. Okay, what he pointed out is that automation, LED, electronic manufacturing, EMS. Okay, a lot more. Okay, there are a lot more. Okay, even in US, you have way more, like semiconductor, software, whatever things, subscription services. There are a lot more. Okay, so how do I determine? Now, the strategy that I primarily use to deliver multi-baggers. How many of you believe I don't really care much about, when I trade, I don't really care much about fundamental, okay, but I can hold the stocks for 3 months to 6 months on minimum. If you believe type B, if you don't believe type S, S means skeptical, because a lot of people don't believe, because when you hold a stock more than 3 months, you definitely meet a QR. When you meet a QR, okay, things can be very uncertain. Okay, things can be very uncertain. Now, what I'm going to share with you is one strategy that I primarily use, which disregard all fundamentals. Okay, which disregard all fundamentals. Now, there are a lot of stocks that I make money from. I don't even know what they are doing. Okay, I don't even know what they're doing. Okay, so this is a strategy that I primarily use. Okay, this is a strategy that I primarily use. And these are the results that we have produced. Okay, Hata 114, but not the best I know. Okay, UWC 400%, and I don't even know what UWC is doing. GradTech 200%. I'm still holding a little bit until now. And not only stocks. This is just to prove that me and my students, we don't just buy like 100 stocks in Malaysia, and when one stock go up, I brag about it. No, because to me, it's all about portfolio management. You have to diversify into few stocks, but you have to catch the right sector. Okay, diversify into few stocks, you catch the right sector. And this was last year, July. You can see as of July, we basically have a mixture of industrial product, technology, and glove. Okay, by the way, Dufu and FP Groups, they are under industrial product. GradTech, Penta, UWC, they are under technology. And Hata, no need to say. Okay, and these are others lah, okay, like Dufu, FP Group, Hata, MFCB, Penta, Supermax, UWC. There are a lot more, but I'm just sharing with you that this is how we get things done. Okay, and it is called trend following. Now, I know that you will still be skeptical after this webinar, because the trend following strategy is a strategy that is counterintuitive, that really disregard fundamentals. Okay, I hold UWC for almost a year already, actually more than a year. Okay, now during the biggest uptrend, okay, I don't really care. Okay, I don't really care the fundamental. It's very simple. Sometimes it's very simple. Let me just ask you guys one question. Okay, today, if you are the top management of the company, do you know whether or not the next QR, your company is going to perform good or not so good? Would you know beforehand? If you would know beforehand, type yes. If you would know beforehand as an insider, type no. Meaning that you are the director, you are any manager, or you are just a small coolie in the company. Okay? Quite likely, the boss will know. But let's say you work at a company. You know, it's very typical. When the sales are good, you can tell there are signs. People are busy. Okay? When the sales are not good, you have extra meetings. You have extra this and that. People are more nervous, things like that. There are definitely clusters of information whereby you can tell whether or not this quarter is going to be better than previous. Okay? And then it is very logical. If you know that your company is going to do good during this quarter, before the quarterly result announced, would you buy your own company's share? To be honest, if you buy your own company shares, type 1. If you wouldn't, type 0. It's definitely you will, because it's free money for you. After you buy, you ask your relative buy. After you ask your relative ask their relative, their friends, their akong to buy. And when everybody buy, price go up. And to trend followers, when we see price goes up, we don't ask any question. Now, people like to ask questions. Hey, why suddenly the stock go up? Okay? You don't ask, you follow. Because why? Okay? This is just one example. Not every time price go up because of insider. This is one example. Because if you always believe that, okay, now people always say, yeah, those insider got news lah, those people got this and that. Now, if you always believe that, okay, there are people who know things ahead of you, and you believe those people are not stupid, they will buy first, then price will move first. Price and volume are proof of people buying and selling. It's that simple. So why trend following method works is because if one stock has been going uptrend, going higher, it only means one thing. People are not interested in selling. Okay? Now, yeah, people will ask or find answer why price go up. Now, if you guys want to know more about trend following, which I'm not going to expand very in-depth in tonight's video, I'm just sharing with you the core beliefs. You can go ahead. You can go to follow my Facebook. I do live every Sunday night, 9 p.m. And whatever I comment is based on trend following strategy. Okay, back to this one. So the core belief of trend following strategy is this. The trend is more likely to continue rather than to reverse. Okay, stocks that are going higher, usually they will go higher. They have higher probability to go up. Like people ask me, hey, why MGRC keep going up? I don't know. It's uptrend. Okay, why Top Glove keeps going down despite the boss keep giving confidence? I don't know. To me, it's downtrend. I don't buy. That's it. People overcomplicate things sometimes. Okay, people overcomplicate things. Okay, so trend traders or trend followers would do the below. Okay, would do things like below. Look into going long in an uptrend or look into going short in a downtrend. So, of course, we are riding trends in the stock market. We only look into going long in an uptrend. Okay, so trend followers determine the position size. Okay, meaning how much we buy is based on the initial risk, meaning that by the time we enter the stock, what's the initial risk? Because we're going to diversify into few stocks like last time, okay, you can see the portfolio just now. We have stocks like GrabTech, UWC, FP Group, Hata, Supermax. Okay, we have to divide. Okay, diversify a bit. So changes in the price will lead to gradual increase or reduction of position size. So when the stock goes higher, and higher, we usually buy more and more and more, which is what most people would not do. And when price goes down, we reduce our position. We don't buy more. Okay. If you buy more, then that's the reason why people still stuck in glove. Probably. Okay. One of the reasons. Okay. I know that it's very sensitive, but to trend followers, once the trend is dead, it's dead. I don't care how good the company is. Okay. So, example, a long only stock trader, which is like trend followers, position traders, would add more position as prices go up and reduce or exit the position as price goes down. Okay, so this is the general rule that we adhere to. Now, some people ask, what about being goreng? Now, when it comes to starting the trend, being an uptrend, and not all uptrends are created equally. Okay, if you have seen that stocks like recently, I think one is what CN Asia. Okay, and also previously we have stocks like Pansa, we have stocks like S-Rich or Switch. These are stocks whereby they are in an uptrend, but it's not healthy. Okay, it's not healthy. A healthy uptrend requires healthy upward movement and healthy correction as well. Okay, so and personally, I avoid goreng stock. Now, just share with you my personal rule now, just take a guess. What do you think is the average price range of the stocks that I trade in Malaysia? Can anyone take a guess? How much? What's the price range of the stocks that I trade most of the time? Okay, then I'll share with you. Can anyone type? Take a guess. Some say 1, some say 5. 50 cents to $1, 5 to 10. 1 to 10, 1 to 5, 2 or more. 10 to 20, above 4. Now, most of you are correct, but to be exact, is around the sweet spot that I like is 2 to 5. That is a sweet spot. And I would say most of my positions would be around $2 to $10. But if the trend is nice, volume is still healthy, I will still take stocks that are like 10, 20, $30. Like right now, I'm still in stocks like MPI. Okay, so, but those are quite rare case. But if the trend is good, I will still stay in the stock. But most of them, okay, are somewhere around $2 to $5. Okay, $2 to $5, or I would say 2 to 5 is the heaviest one. Next to that would be 5 to 10. Okay, so now let me give you a few example of good uptrend. Okay, now this is Shen. Now I remember when was the last webinar that I spoke for Bursa. It's March 3rd. Now because I basically, because on March 3rd I talk about Kickstart Stock Trading with Trend Following. This was the webinar. Okay, this was, I believe you can still watch in YouTube or what, I'm not sure. Okay, but this was the one that a webinar that I do on March 3rd, 2021 this year. And during that time, I gave 4 examples of trends, trending stocks, 2 uptrends, 2 downtrends. Okay, and this was the slide, the exact screenshot that I used during that time, taken from that slide. And you can see by this old trading view watermark here. Okay, so first, you can see that DNO is in an uptrend. This is the example that I give. Okay, so the only thing I will usually tell people is uptrending stocks have higher probability to go up rather than down, and vice versa. How you're going to enter it depends. Now, some people like to buy on breakout. Some people like to wait until the stock retrace. Okay, let me just share. Some people like to wait. My personal style is I want to wait until the stock go up like this. I'll wait until the stock retrace and turn up. I'll buy here and set a stop loss here. Now, some people say how to define uptrend, downtrend based on chart. Since uptrend is smaller time frame, might be downtrend in higher time frame. To me, I see the entire year at least. I see 1 year. Is this uptrend or downtrend? It's obviously uptrend. Then this is an uptrending stocks. I don't care lower time frame. It is like you look at Nasdaq right now, things are quite bearish. But if you look at super long term, it is still uptrend. Okay, something like that. Okay, so it is like you look at some of the stocks. Right now, it may not be good, might be sluggish, but over the super long run, they are still doing well. Okay, they are still doing well. Okay, so this is DNO as of 3rd of March. And this is where DNO is right now. So from here to here, okay, you can see this vertical line is 1st of March, basically. Okay, this is where, as of the screenshot was taken, you can see that from there up until here, DNO has gone up to 589. And recently, we know that it break another new high and then it come back down a little bit. But overall, it is still up. Okay, and then basically what we do is we wait until it has a correction. Okay, so right here, you can see April, May, there's a correction and the stock resume the trend. That is when we're gonna re-enter the stock. Okay, re-enter the stock now. When it is somewhere around this area, some people might reduce position because it's dropping, but it's fine. Most important thing is you're gonna know what stocks are uptrend in long term. Yeah, uptrend in long term. Okay, so now another example is MPI. So as of March that time, it was trading at around 41 ringgit. And as of today, it grew up by around 10%, which is, again, not too shabby. It's better than you got stuck in glove. Okay. It is better than you got stuck in some other lousy stocks. Okay. So it's not about, I'm not going to go details on things like what you guys ask, like a lot more like market timing. Before you time the market, get the right stocks first. This is, to a trend follower like me, getting the right stock is the first place. If you get into a wrong stocks, okay, no matter how good your timing is going to still create a lot of troubles later. Okay, and trend followers like me, we don't monitor the market. Okay, just make up. I just share with you, we don't monitor the market. Okay, we don't monitor the market. Okay, so to me, it's a more like a passive style of trading. Okay, so and the third example that I shared during that webinar is actually Top Glove. And during that time, I said this is a turnaround. How many of you cannot see this is a turnaround one? From uptrend turn to like downtrend. Some people would already say this is a downtrend. If you cannot tell, the issue is quite serious. Okay. So presented on March 3rd, I said that this is an example of uptrend turns into downtrend. Why do we say so? Is because when you start seeing stocks, they stop forming new high. That's the first thing. They stop forming new high. And you start to see clusters of lower lows. Okay, you start to see clusters of lower low. Here's a lower low. But after they go up, did not break new high, then go down again. Lower low, lower low. okay? And then go up a while, then go down again. And I tell a lot of people, okay, during that time, beginning of this year, I said you should not be in glove already. That time, it was like $5. And where is Top Glove right now? It's less than $3 already. An extended 50% loss. An extended 50% loss. Okay. Next is AirAsia X. Okay. As of here, this is a weekly chart, by the way. It's a downtrend. And yes, it go up a little bit here, but again, some people might say, oh, here seems like want to go up a little bit, going up, things like that. I will still say, as a trend follower, it's a downtrend. Okay. Some people don't understand, but it is because of some probability things. Okay. If the super long run, the super long term, you can see, I see the trend from like 2016, 17, 18, 19, it has been down. The chances for it to recover is quite small. So from March until now, if you hold AirAsia X, basically you're still there. You don't make money. You better put your money in stocks like MPI. Although MPI is like 40 over bucks, okay, buy 100 units, you need like 4,000 plus. It's better than you put this 4,000 plus in elsewhere, like AirAsia X, things like that. Okay, at least in MPI, you still make maybe 10%. If you put in VTROX, maybe you make more, things like that. Okay, so how do you time the market? Those depends on. Now, the only thing I want to share with you is the concept of trend. How do you precise your entry is another thing. Okay, how do you precise your entry is another thing. What I'm sharing with you is trend, the quality of the trend. Okay, would you buy if 1 year chart looks flat? Now, it depends. It depends what happened before that year. If that stock has been uptrend for 3 years, then stays flat for 1 year, I would watch if it tries to go up again. Definitely is a good candidate. We want stocks that has more uptrend than downtrends in its entire history. We want stocks has more uptrend than downtrends in its entire history, if you can trace back. Okay, if you don't understand what I'm talking about, let me share with you. Okay, let me share with you very quickly what I try to share before I go to the next topic. Okay, now, wait, okay, if you can see my chart type C, you can see my chart type C. Okay, okay, good. So this is Maybank. Now, Maybank right now might be in an uptrend. But am I interested in it? Not entirely. It's not too bad, but I'm not really into it because when I look at the entire history, at least for past 10 years, you have more ups than downs, but it's still okay. Okay. Honestly speaking, not too bad. You have more ups than downs, still qualified. But banking stocks, you got not much team right now. So this is CIMB. Technically speaking, you still got more ups than downs, but compared to what I would say a quality one would be like this. Can you see the difference? If you can see the difference, okay, type yes. If you can see the difference, type yes. It is more apparent. So meaning that if stocks like QL, okay, were to turn up again, it doesn't mean I will buy, but I'll give priority to these type of stocks. Okay, but it doesn't mean like stocks like just now, okay, I wouldn't buy lah. Okay, I wouldn't buy if there is a team, but just to tell you that I would give priority. Okay, I'll give priority to these stocks. Okay, so how you're going to enter, it depends. Different people have different flavors of strategy. Some people like to trade a breakout. Some people like to use indicators, things like that. Okay, but I'm here only to comment on quality of trend. Okay, quality of trend. Okay, so now pros and cons of trend following. Let me just go through very quickly. First one, we ignore short-term market noise. Okay, we ignore short-term market noise. Second, monitoring is an option and no speculation is involved. If at the first place, you choose stocks that are not so-called goring stocks. Okay, so to me, During daytime, I don't really monitor the market. Okay, during some days, I don't even bother to log in. Okay, I don't even bother to log in. And next, low trading frequency, meaning that we don't buy and sell very often. We pay less commission over the long run. Okay, we pay less commission over the long run. So I met a short-term traders earlier this year. So last year, my portfolio was up by 97%. And the other traders that I met is also up by around 99 points, close to 100% gain. But when we calculate our trading brokerage fee, his brokerage fee is almost 5 times more than mine. Okay, almost 5 times more than mine. Okay, it doesn't mean that short-term trading is not good, but you got to understand that one of the things that you need to take care is your trading frequency. If your trading frequencies is high, make sure you are profitable. Okay, if you're not, then you have additional cost. Okay, additional cost. So for trend following, low trading frequencies, paying less commission over the long run. This is definitely good because we buy one stocks, we hold for 3 months, 6 months, things like that. Okay, and we have higher average gain, better risk reward ratio. So we hold the entire trend of like Top Glove, Hata, UWC. So 200% gain is a sort of like higher gain. And every stock we give a stop loss of not more than 10% most of the time, because anyway, I don't deal with penny stocks. So for example, if I were to buy stocks like, I don't know, P Metal, okay, and then for example, it is like $10. For example, easy math lah, okay, it's a 10. If I buy into a $10, 10 ringgit stocks, I'll put my stop loss lowest at 9. So my initial stop loss is 10%. Okay, so meaning that one big win, I can tahan a lot of loss. Okay, so I don't need like exceptionally good winning rates, okay, to stay profitable. My winning rate can struggle like 20%, 30%, meaning that out of 10 stocks, only 3 stocks make money. Okay. Then I can still stay profitable. This is the beauty of the strategy. Okay. So this is what I like. Okay. Let's talk about the cons. Okay. Let's talk about the cons. Win rate can suffer sometimes, especially during a choppy market, meaning that like 2018, whereby stock is going nowhere, stock is going sideways. Now, during that period of time, I would say that people who know how to trade swings or speculation can make more money because you go in, you go out in one wave. So trend followers, usually we target big trends. Okay, usually we target big trends. It's like out of like 10 wins, we want 1 to 2 wins to be a home run. Things like that. Okay, so of course, when market is choppy, you don't get that type of trade. Okay, and the second is what I would say why most people cannot write big trends is challenging to write big trends. Whenever you look at the market dropped 3%, the stock dropped 4%, 5% in a day. Most people will start panic. But to us, okay, one of the way of managing is to reduce the position, meaning that if you are worried, you sell a little bit first. Okay, when you have like 100% gain, okay, you sell half to take back your cost, the rest is free share. Then we ride the trend until the end. Okay, how do we define the end? We put one thing called trailing stop. Okay, we'll put one thing called trailing stop. Okay, so here we talk about very quickly about Bursa stock market. Okay, Bursa stock market. Now, this slide is the screenshot was taken last week, so there will be a little bit of changes here. So technology is still the strongest trend. Okay, technology is still the strongest trend. Now let me just push my tech, this one. Okay, so we can see technology is still the strongest trend. It is at all-time high. Now, remember one thing, okay? All-time high is a sign of strength. All-time high is a sign of strength. You don't see weak stocks go up all-time high. Okay, so this one is Bursa Technology Index. Okay, so, and if we turn on the indicators, you can actually see that it's at a support. Okay, you can see it's at a support, short-term support here. And we can see stocks like Inari. Okay, no buy call, no sell call, just sharing with you. Because of stocks like Inari, they are trading at their like historical high, things like that. And even stocks like GrabTech is approaching the historical high. And even stocks like DNO is trading at historical high. So some people say, how do you buy these stocks? You wait until it hit the support and rebound. This is the way that I like. Okay, this is the way that I like. And it stocks like MPI is doing very well. Okay, it's not like making a lot of money, but at least it is trending up. How many of you you don't mind put your money into stocks that go up like this? At least don't drop lah. If you don't mind, type me, ME. Okay, some people, they want crazy stocks that go up 10, 20, 30% in a week. To me, holding into uptrending stocks like this, yes, it can be a little bit boring, but it's better than putting your money into stocks like Glove, or like last time people like to ask me, this stock, where is the bottom? Is this the bottom? Is this the bottom? And now is it the bottom? Then every day, the only question they ask is it the bottom? Is it the bottom? Is it the bottom? And then they buy, the stock drop another 4 cents. Okay. And after 1 year, you realize that, hey, might as well I put my money into stocks like MPI. Might as well I put my money into stocks like VTROX. Okay. And that's the thing that most people realize after math. Okay. So technology is still the strongest. Pick the right one. I will say that right now, okay, because Nasdaq has a little bit of a flash crash, you might have some opportunity to see some technology stocks retrace. And when they rebound, you might want to consider. Okay. Next, we talk about industrial products, stocks like metals, packaging, things like that. Okay. So stocks like metal, I would say the best trend, okay, is P metal. Okay. I know that some people like to speculate Anju, but to me, the best one is P metal. Okay. Is P metal. Crossover, I buy whole until now. That's it. That's simple. You don't need like very jange strategy, because we talk about trend only. Okay. So this is what I can share. And like this one, okay, Syntax is also climbing up. It's a little bit boring. It's a bit boring, but trend is up. Okay. Trend is up. Okay. So this one, if it can break, okay, if it can break here, then I would say it's a good one. So you can see it. Industrial product, okay, is actually trading at all-time high as well. Okay, industrial product is actually trading at all-time high. But because this one is index, like some people don't know, Dufu is actually in industrial product. Okay. We all thought it's in tech, but I think the day I found out is in industrial product. So sometimes things can be a little different. Okay, but generally tech and industrial product remains the strongest trend in Malaysia. So which stock you are going to look at? To me, of course, my priority, my focus would be stocks that are trending up. Okay, they are trending up. Okay. So year-to-date performance, okay, year-to-date performance of different market cap, you can see that the best is actually small cap, followed by mid cap, followed by FBM 70. But the best performing would be small cap. But let's say, if we move to the 3 months performance, we can see that the FBM 70 actually outperformed the rest, which means if FBM 70 are stocks that are the next 70 bigger company in after the 30 stocks, the 30 CI. So from here you can see that if you are in this FBM 70 components, on average you can make money. You might have make more money than the rest. What I want to point to you is FBM ACE. ACE market is really not doing well. Okay. ACE market is really not doing well. And this is your typical penny stocks and things like that. They are not doing well. So you can see that beginning of last year, it has speculation. Thereafter, it stays flat. It stays flat. And basically right now, FBM ACE is not doing well. Whereas you can see that some of the mid cap, small cap, they are doing very well. Okay, they are doing very well. So one of the easiest way is like me. Okay, if you're like me, you always focus on stocks that are $2 to $5 to $10. The chances for you to get into stocks that are in FBM 70 and FBM mid cap is quite big. General speaking, okay, but nonetheless, the primary thing that I want to point to you is ACE market, okay, is weak right now. Okay, so Malaysia market doesn't look too bad given the global market flash crash, sorry, that hit most stock markets. Like last night, the Nasdaq fall by 400 over points, 500 points. But today, we look at the market, still okay lah. Okay, it's not a terrible thing after all. A lot of uptrending stocks, they're still above the nearest support, which is a good thing. And technology remains a steady uptrend, followed by industrial products, which consist mainly metal and packaging subsectors. Note that even if a sector is strong, remember that it doesn't mean that all stocks within that sector will make a move. Okay, so stocks within those two subsectors which have a larger market capitalization remain to be my personal focus right now. Remain to be my personal focus. All right, so these are the things that I focus right now. And I actually already own some of the stocks, okay, within these lines. Okay, so I will still watch very closely when it comes to tech stocks and also industrial product, and also some of the stocks that are in an uptrend. Okay, if the trend is still up, is still good, then of course you can still watch. You have a little bit of varieties. Okay, we have to diversify across different stocks, but it is also very important to diversify across different sectors. Okay, so that will be all for today's. Okay, I hope that you have learned something. If you have learned something, can you please type yes in the chat box below? And I'll pass the time back to Shane.
Okay, thank you so much, Jin Hao, for a very wonderful session where you reviewed to us your strategy to profit in Bursa Malaysia market. So if you have any question to ask Jin Hao, you may write in the Q&A box and we will address them accordingly. Of course, due to time constraint and due to if there are a lot of questions, then we may not be able to address every one of them. I think Jin Hao, you also address some Q&A along the way.
Yeah. I have been watching the chat box.
Chat box. Okay. Yeah. So the first question is, I think many of us will also want to know. So what is the latest uptrend stock? So this is asked by Solly Wong.
Okay, latest uptrend stocks in Malaysia, I would say within the technology line would be stocks like MPI, Vitrox, Inari, and also DNO, GrabTech. I think some of the interesting one that you might want to watch is stocks like Franken. Okay, stocks like Franken, and also I think you can watch stocks like Unisem. You can watch stocks like UWC. I think UWC starts to climb up a little bit already. Okay, so these are the uptrend one. Now, I'll give you some contrast. Give you some contrast on what are the technology stocks that are not so uptrend. Okay, I'll give you some varieties so that you understand. The not so uptrend one is stocks like MI. Okay, MI. Stocks like JF Tech, stocks like JHM. They are not as nice compared to stocks like MPI. Okay, so you might want to look at the charts and compare side by side, then you can tell what's the type of the trend and how do I determine good quality uptrend.
Okay, the next question is asked by Beng Hin. How long a period to consider that a stock is confirmed trending up?
Okay, now this one depends. A lot of time I would say that what you guys know, if you use like EMA crossover, things like that, yeah, those are good. Like your whatever EMA 20 cross 50, 50 cross 100. These are great. Okay, but understand that this situation can happen on a stock that is in an ultimate downtrend, but suddenly it turns up. Okay, suddenly it turns up. I can give you an example. Stocks like Genting. Okay, stocks like Genting. If you use some, whatever, I don't know what indicators you use. Some people say Genting, short to mid-term wise, it seems like one to go up. But actually, if you look at long, like you don't need a lot of like indicators or what to see. You just have to look at the 2 years, 3 years, 5 years charts. Then the first instinct that tell you this one is up or down. Okay. One of my friends did an experiment. Okay. He basically give the children, okay, to like 3-4 years old kid lah. Okay. They print like 5 to 10 years chart. You ask the kid, this one up or down or not going nowhere. They will tell you. If they tell you it's up, it's quite obvious already. We want those kind of stocks. We want those kind of stocks. And I recommend one book to you guys. It's called How to Make Money in Stocks, is behind there. It's by William O'Neill. So during the beginning of in the first part of the books, he basically say what are the long-term winner in the market. Okay, he used examples in the US, but you can look at the 10 years, 20 years pattern and then apply it in Malaysia. Then you can roughly know what is the type of trend that we're talking about.
Okay. Now, just now, in reference to the trend, right? The follow-up question is, could an obvious strong uptrend mean that the bull is old and the not so obvious probably is a young bull?
Okay, let me just share with you one thing. Do you guys agree that stocks that go up before COVID, okay, they got attacked by COVID as well? I mean, before COVID is like last year, March. Try to recall. Stocks that go up before COVID crash. Okay, I call it a COVID crash. Stocks that are uptrend before COVID crash, they turn down for a short period of time at least. Do you agree? If you agree, type A. If you agree, type A. They all got affected by COVID. The crash, like last year, last year, March, April, they all got affected. But there was in a very good uptrend. Then do you realize that post-COVID, these stocks, they break new high faster than the rest as well? If you realize, type R. R stands for realize. If you realize. Okay. This is the thing that I want to share with you. Okay. It doesn't mean that a stock that has been going up for many years, the bull is old. Sometimes it can take a little bit of rest, okay, which it should. Okay, a healthy uptrend requires some rest as well. But when it starts to have some price action, you can see that it starts to break like 1 month highs, 2 month highs. You better rewatch this stock. Okay, this is what we call a rally history. Now, stocks that has a very good rally history, RALY, okay, they will take a rest. But when the price action starts again, it will probably be into a rally again. It is just like stocks that has been a pump and dump play before, it will still be a pump and dump play in the future if it were to go up. Very obvious. I give you one example, Vivocom. Last time since Instaco, this is a Goreng stocks. It's just a matter of time people will throw it. Okay. So this is what I can share with you. Okay. Stocks that used to be a pump and dump play will probably be a pump and dump play again. And stocks that used to have a good rally, okay, meaning that 1 year go up by 80, 100, 200%. It might rest for half year or a year, but because the rally history is good, if it were to go up again, it will probably have another good rally. Okay, this is based on my experience. We have seen it many times in stocks like P Metal. in stocks like Anju, in stocks like many more, like tech stocks. That's why I say pay attention on stocks like UWC, Unisem, Franken. Okay, so no buy call. Okay, no buy call again. Okay, just as a study. All right.
Yes, that's right. No any recommendation to buy or sell any companies. Yeah. So just now we cover at length about uptrend stock, right? So the follow-up question is asked by Veronica Paul. How do we screen for trend stocks?
Okay. Of course, you can use screeners. Like for example, I use ChartNexus screeners, but usually those technical screeners you will need to pay. You will need to pay. One of the easiest one, which is free, you can use Top Gainer. Top Gainer in Ringgit. So every day, I want you to do an exercise. Okay, I want you to do an exercise for maybe 1 week or 2 weeks. Every day, okay, every day 5 p.m. when the market is closed, you screenshot the top 30 gainers. Every day you do it for 2 weeks or even 1 month if you can. Okay, I think you can do for 1 week or 2 weeks first. And then what you're going to do is you exclude maybe some of the stocks that you wouldn't buy, or some of the stocks that got abnormal spread. Okay, like super low volume gonna push up. And when you pay attention on stocks that ranges between like $1 to $2, $1 or $2 to like maybe $10-20. Okay, if this stock come out in a top gainer more than twice or 3 times a week, you better look into it seriously. Okay, you better look into it seriously. So top gainer is the thing that we use to understand, to get an idea what are the stocks that are gaining and having more positive momentum in the market. I don't look at top volume because you realize that in top volume, you get to see penny stocks every single day. Okay, and some of the penny stocks, they are in top volume, either they go up, go down, or just like sideways exchanging hand. Okay, they will appear in top volume. Okay, so I'll focus on top gainer. All right.
Okay. Megat Muazzam Shah would like to ask, how do you determine when to get out from stock using trailing stop?
Okay, so for
any indicators?
Okay, one simplest indicator is called super trend. Okay, one simplest indicator is called super trend. You can find it in a trading view. But basically, trailing stop, you can just put a trailing stop below the previous swing low. Meaning that when the stock creates lower low, that's when I get out from the stock, most of the stock. You can also use like your 20 days moving average, things like that. Okay, just a guideline. It is a turning point. How do you define a turning point? It could be a super trend. It could be any moving average, like maybe like any that you are convenient, you are comfortable to use or you have been using. Just determine a turning point. Okay, you can also use like some people use like 5x20. That could be one of the ways as well. Okay, now sometimes trailing stop, you don't have to exit all. You can exit half and you wait. Maybe if this stock, for example, tend to rebound from 50 moving average, then you might want to wait and hold another half positions or a quarter positions and see whether or not it would rebound from the 50 MA or any previously strong tested support. Okay, so be a bit flexible. There's no right or wrong. There's no right or wrong. So it's like even stocks like Top Glove, Hata, we don't sell one go. We sell by batches. Okay, we sell by batches. All right.
Okay. Ing would like to ask, if we hold uptrend stock, how do we manage our emotion whenever there are fluctuations?
Would have different way of managing your emotion. Okay, it depends what kind of emotion. Some people feel scared. Okay, some people feel scared. I will just say that a lot of time, emotion has to do with the amount of risk that you actually subconsciously can handle, and it always it is always affected by the position size that you are taking. If you cannot sleep well every night, it is a sign that you are taking positions that are larger than what you could actually handle. Okay, so one of the ways is if the stock has been going up for 20, 30, 40%, you feel insecure. You can take a little bit of profit. It's okay one. Or maybe tomorrow is QR, you scared. Take half lah. Okay. Or take whatever. Take until you can sleep well at night. Okay. Control the position size in order to manage your emotion. A lot of time is more about controlling the position size. It's all about controlling the position size. It would help most of the time. Okay.
Okay. PY would like to ask, can you explain why you don't believe in recovery plays after the COVID-19 impact?
Most of them are not in a very good uptrend, put it in this way. Trend-wise, it is not the best. And you can see that even stocks like Genting, things like that, okay, the stock can actually, it can go up 1 to 2 weeks, then go down back to square one. Okay. Let me see. I can share my screen again. Okay. Why I don't like this stock is because this type of stocks like this, you can see that it has a push, then it has a down. Then you have to take a profit here. Okay. You have to take a profit somewhere here. So in this wave, let's say if you were to buy here, it's like only less than 10%. And then after that, because trend follower don't like inconsistent movement, okay? You go up a while, then go down for 2 months, then go up for 1 month again, then go down for 2 months. There's an inconsistent trend. Because if it were to go up, if you buy here, if here it hits your trailing stop, you probably don't make money as well. Okay? And one wave going up, then it back to square one. Meaning that every correction, it erases previous gain. Then I will say that this is not really a good one. Okay, unless you play swing. So that's why this type of stocks, usually trend follower don't favor, is because it is not a type of stocks for trend follower. It is more like a type of stocks for maybe investor or swing players, whereby they are in the market to trade one swing like this. Okay, then there's type for that. There's a type for if you can handle that, then there's a type of stocks for you. Okay, we have to know that not every type of stocks is for everybody. Okay, I think this is quite self-explanatory. Okay, some people can make money from stocks like, I don't know, right now there's a lot of speculative stocks, but for trend followers, we don't want. Okay, but trend followers trend our mentality and the way we do things, the way we manage our portfolio and things like that. It is meant to train ourselves to focus on the big and get ready for any big trends. So we only go into stocks that, based on statistic, it has a probability to have a big trend. And these are the stocks that usually people scared to buy. It's like every week it breaks new high, every month breaks new high, and it's like, yeah, I should have buy last week, I should have buy last month, I should have buy last week. Do you ever encountered any stocks? Every time you look at a stock, you tell yourself, I should have buy last week, I should have buy last month, I should have buy 2 weeks ago. If yes, type yes. Meaning that these type of stocks are usually stocks that keep going higher, 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 and higher. Okay. And normal people just don't dare to buy. Or instead of saying don't dare to buy, I would just say because they are not trained to handle this type of stocks. Okay. So I'll just say recovery play is not really what trend followers would put a lot of focus at least in Malaysia market. Okay, at least in Malaysia market. All right.
Okay, so let's do one last question, which is how do we avoid goring stock? How do we determine that this is pump and dump? So this question by PY.
First, look at history. Look at history. if this stock has been a candidate for pump and dump, it would usually be, meaning that like suddenly XOX go up again. I will avoid, even if it is an uptrend. Okay, this is the first tip. Second tip, I will avoid stocks below 50 cents. Okay, I will avoid stocks below 50 cents. Okay, because most of the pump and dump plays are penny stocks. Okay, I would say below 1 ringgit, you still have to be careful because sometimes those less than 1 ringgit can also go up quite steep. Okay. Third, when everyone is talking about that stock, a lot of people are talking about that stock. You probably need to be careful. Okay. Now, even if you accidentally buy into one stocks that are being goreng, the only thing that you need to, there's one thing that you need to do. Like for example, you get into Vivocom. One thing that you need to do is first set an expectation right. Second, take profit by batches when it goes up. Okay, take profit bit by bit. And third, you better have some kind of like alerts and things like that, whereby you set a trailing stop or a stop loss. Okay, like some brokers, they allow stop loss function, things like that. And you set a trailing stop right in either as an alert or as an order type, as an order, meaning that a stop loss order. Okay, so that if there is any drastic happens when it comes to the price movement, okay, like those goreng stocks suddenly go down, then you would exit the stock. Okay, you would exit the stock.
Okay, so thank you so much, Jinhao, for doing this very robust Q&A sessions. So thank you so much for this segment. So before we proceed, before we conclude this session, so let me tell you about our next webinar. Our next webinar is going on this topic, understanding cash flow management, the heartbeat of every business. Okay, so this is happening on next Friday, which is 8th of October 2021, 8:30 to 10 o'clock. So I've given you the registration link in the chat group, so where you can register and learn about cash flow. Okay, so this is the topic on fundamental analysis. So last but not least, thank you so much. A big thank you I want to express to Jinhao for doing this segment, for reviewing to us your strategy and how you profit in the stock market every single year and make multi-bagger returns. So this is Jinhao. Hope all of you here had learned a lot from Jinhao today. So we'll see you all in our next webinar on next Friday.
Thanks, everyone. Good night.
Yeah, bye, everybody.